The stock market crash of 1929. The stock market crash caused devastation across the country because stocks were at an all-time high and without warning began plummeting on Black Tuesday, making many stocks worthless. This graph shows the great rate at which the stocks fell. This picture shows how the great loss of value in the stock market caused many people to lose their jobs, houses, and others even took their own lives because they had lost all of their money. The system of buying on a margin, which was buying securities and services of borrowed money using stocks as collateral, also caused thousands of people to lose money because the collateral shares were worthless. Credit was a form of payment developed in the late 1920s, which allowed people to borrow money from banks, and then paying it back later with interest. When the stock market crashed, people were unable to pay back the banks, which led to bank failures. Black Tuesday took place on October 29, 1929, and was the day the stock market crashed. The crash began when a few nervous investors began selling stocks, which convinced others to as well. This started a chain reaction that started a major sell-off, and only few people were willing to buy the millions of stocks that filled the market. The large amount of stocks left caused stock market prices to plunge, causing more people to sell their stocks. On just one normal Tuesday, the stock market had completely crashed.
1929. The financial house of cards collapses, and the overinflated stock market plunges into a Great Depression. A financial panic grips the world. For the majority, it means the interminable line outside factory gates, desperately hoping for a job that rarely comes. It means hunger and the march of the unemployed in the nation's capital. With acute domestic problems, America would now isolate herself more than ever from the international scene. It started in America, but practically overnight an economic blizzard swept the world. In Japan, France, Britain, always the unemployed, the soot kitchens, the grinding poverty, and the despair.
There were many causes that led up to the crash of the stock market. The causes included the poor distribution of wealth, consumers relying mainly on credit, which was running out, poor industry, stock prices rising to unrealistic levels, and the margin buying, which was encouraged by the Federal Reserve. All of these events were the pre-existing causes of the stock market's $16 billion loss in value. During the stock market crash, people had hardships, and the following years were rough on America. This song, How Can a Poor Man Survive in Such Hard Times, is just one of the many people sang about the difficulties during the years to come as a result of the stock market crash. The major effects of the stock market crash were the closing of banks, farms, and other businesses. Homelessness and joblessness were effects as well. The crash may have began in America, but soon traveled around the world, mainly hurting Europe as well, who was still recovering from World War I. Even though the stock market crash of 1929 was a catastrophe on its own, the main historical significance of it was the fact that it was one of the leading causes of the Great Depression that occurred in the following years. It took many years for America to fully recover from the consequences of the stock market crash.
There was once a time when everything was cheap, but now prices almost put some